Hello there. Welcome back to Principles of Accounts, O level. Zimsec. We are going to look at a recent question paper of June 2024. This is the first question on that question paper. So this question one that we have on the preparation of the income statement and also the manufacturing account. So this question one, it reads, the following is a trial balance of T, no wonder, the manufacturer. Trial balance is at 31 December 2021. We're given the trial balance that we're given there. So you see that you can go through the trial balance that we have and the information that we have inside our trial balance. And then all the additional information on 31 December 2021, we're given this additional information from additional information 1 went down to additional information number 4. So you are supposed to go through all the additional information that you are given so that when you're answering the question, you can see where adjustments needs to be done and you can adjust for that. So if you go to our question part, it reads on A manufacturing account for the year ended 31 December 2021 with 14 marks. So let's take note, 14 marks are there on the first question on the preparation of manufacturing account. And also, we are supposed to take note where the year is ending. The year is ending on 31 December 2021. Remember, we are supposed to write our headline, we are supposed to indicate where the financial year is ending. So on the second part, it requires us to prepare an income statement for the end of 31 December 2021 with 6 months. So we are also supposed to write our heading, whereby we are also have to indicate where the year is ending, which is 31 December 2021. And also, remember on the heading, you're supposed also to indicate what are you preparing. In this case, on B, we are preparing an income statement, and then the name of the person, that is, it is the sole trader in this case. So the name of that sole trader, which is Wanda, we are supposed to mention it in the heading, the name of the statement that we are preparing, that is the income statement, and then the year ending. Those three parts are supposed to be highlighted. So if you go to our answer section, you'll see that we have already prepared T no wonder manufacturing account for the year ended 31 December 2021. So you see that the key points on our heading is that we are supposed to indicate who are you preparing for and what are you preparing, which is the manufacturing account, and then when is the year ending, which is 31 December 2021. Very important. So remember, this is our manufacturing account. In our manufacturing account, remember, we are supposed to start by calculating the cost of the direct materials. Remember, we are supposed to first of all indicate the calculation of our prime cost, whereby we are supposed to say our direct materials, and then we add our direct labor, and then we are going to get your prime costs. So this is what we are supposed to show at the beginning of our manufacturing account. But basically, we are going to start with the calculation of direct materials, where we are going to say opening stock or opening inventory for raw materials, and then we add our purchases. If there are carriages of those purchases of raw materials, we're supposed to add them. And if there are purchase returns of those raw materials, we're supposed to subtract the returns from our purchases so that we get our net sales. Then at the end, we're supposed to subtract the closing stock or the closing inventory of those raw materials so that we find the cost of the raw materials. So the answer that you get there, you're supposed to add to the direct labor cost, then you get your prime cost. So this is what we have. So basically, we are going to see in the question, what are we going to start with? We can just refer to the question and see what information are we given as per this question. So we go back. If you go now, the opening inventory figures, we are going to find them there in the trial balance. Remember, when you're preparing manufacturing account, we have got 3 different types of inventories that you are going to see. We are going to see the inventory of raw materials, which is the year in this question, also work in progress inventory, and also you're going to have finished goods inventory. So you would see that according to the preparation of the manufacturing account, the inventory for raw materials is adjusted in the manufacturing account. Work in progress again, or work in process is also supposed to be adjusted in the manufacturing account. Only finished goods is going to be adjusted in the income statement in the trading account. So this is what we have. So at the beginning of our manufacturing account, we are going to start with our opening inventory of raw materials, which is 30,600. So we can go back to our answer. That indicate that. So here we are saying opening inventory of raw materials. And then on our opening inventory of raw materials, the figure that we have is 30,600, and then we can just indicate it. in this column. And then obviously we are supposed to add our purchases. And this is to be purchases of raw materials. Again, we just go back to the question, try to see what we have in terms of those purchases. So let's try to go back and see what actually do we have in terms of the purchases of our raw material. So we can go down to see what figure of purchase of raw materials we have. But if you come here, you would see that you're given a purchase of raw materials of 104,000 there. And also we check if you've got returns of those purchases of raw materials. You go down checking if you've got any returns of our purchases of raw materials. So you'd see that we have nothing to do with our purchase of raw materials. So it means we are not going to subtract those purchases. There's nothing. But we're just going to pick the purchase of raw material figure that we have, which is 104,000, and add it to our open stock of raw materials. So we come here, you see, we now know that our purchase of raw materials, we have got 104,000. And we do not have returns. Then before you add there, you are supposed to check if you have got any carriage of raw materials, carriage inwards of raw materials. You can go over all the information that you are given to check if you've got carriage inwards or raw materials. So you see that we have got nothing that we have there in terms of carriage. If we add the carriage of raw materials, that is carriage inwards of raw materials, we are supposed to add it here again, and then we get the total. But since we don't have it, we are just going to add the two that we have there, that is 30,600 plus 104,000. So we add the two, you're going to get 134,600. So we have 134,600. Then here now we are supposed to subtract, so we can say less closing inventory of raw materials. You can get that figure in the additional information. Remember the figures for our closing inventory, we get it in the additional information. So we can go down to check in the additional information what we have in terms of our closing inventory. So for raw materials, we've got 33,000. If you come here, see that we have got 33,000. So we can just go ahead and get a search. It's 33,000. So we are here, we are saying 33,000. And remember, we are saying less, so we are subtracting. So we'll show it in bracket. So this is what we have. And then after this now, we can now get our cost of raw materials consumed. So the figure that we are going to get there is going to indicate our cost of raw materials consumed. So that's the figure that is going to come here. So if you see 134,600 minus 33,000, the figure that you are supposed to get there is 101,600. So we are saying 101,600. Then after that, that's when now you are supposed to add your direct labor, which is our direct wages. So remember, we say to get our prime cost, we are saying direct materials plus direct labor. So our direct materials cost is the one that we have for cost of raw materials consumed, indicating our direct material cost. So here now we are supposed to add direct wages, direct labor, which is direct wages. So we are saying add direct wages. So we can get this figure in the information that we are given. So we go to the question to try to check which figure for direct wages do we have. You see that we've got 18,000 here. There's our direct wages figure, 18,000 indicated here. So before you enter that figure, obviously you go to additional information to check if you have got any prepayments or accruals of our direct wages. You see that we have got direct wages owing amounted to 3,000. So remember, when it's an accrual, remember the adjustment that we make when there is an accrual or owing. Whenever we see accrual or owing, we are supposed to add. And when we see anything that is indicated as a prepayment or in advance, paid in advance, we're supposed to subtract. This is, we are trying to comply with the matching concept. The matching or accruals concept. So this is how we adjust whenever we have these adjustments. So this 3,000, we are saying we are going to add it to figure for direct wages that we are given. in the list of balances, which is 18,000. So we are going to say 80,000 plus 3,000. So in brackets, we are going to say 18,000 plus 3,000. So basically, we are saying 18,000 plus 3,000. So we add the two. We are supposed to put it in this column whereby we are going to get 21,000 here. So we are saying 21,000. So we can go to the next and try to see any other manufacturing overheads that we have in the question and we put it here. So if we come here, you see that now we according to any direct expenses that we have, we do no longer have any direct expenses. So what are we supposed to do? We can just put our 21,000 in this column so that we can add it to our cost of raw materials consumed to get our prime cost. So here we are saying 21,000. But I will add it here. So what we are supposed to do is say 101,600. We are saying here we are saying 101,600 plus our 21,000. Then try to see what we get there. Before we enter that, remember we are supposed to check if you have got any other direct expenses, like what I was saying. But if you go back there, you'd see that we have got royalties that we have 10,000. It's also a direct expense that we are supposed to include there. Royalties 10,000. I'll go back there and get that one. So here we are saying we have got royalties, which is we are having 10,000. So now we can add the two. And obviously, if you add the two, you're going to get your 31,000 here. At least we are saying 21,000 plus 10,000, you get your 31,000. 31,000, you add it to your cost of raw materials consumed is around 1,600. And answer that you're going to get is 132,600. So here we are saying 132,600. And this is now the figure that is indicating our prime cost. So this is now our prime cost. So this is the figure that we have. So we go down and see what else do we have after prime cost now. We are now supposed to add our factory overheads. So we say factory. These are the figures that we are just going to list beneath this heading. So basically here we are saying add factory overheads. So these are our factory overheads. We list all the factory overheads that we have requested. So under factory overheads, that's where we're going to put all indirect expenses that we have in the question. So we start from the where we have our balances, going down to check for any factory overheads or indirect expenses that we have. So go down. Remember, we are still in the manufacturing, so those are indirect expenses should relate to the manufacturing account or the manufacturing process. So if you go down, you see that we've got rent, 4,000, and you see that rent also is a manufacturing overhead. But we can go to the additional information to see what is it saying about their portion of rent. So if you see to additional information number 2, it reads rent is apportioned at 80% for factory and 20% for office. So in the manufacturing account, where we are concerned about the factory part, so we are saying 80% of rent should go to the manufacturing. So the figure that we have for rent is 24,000. So we are going to say 80% of 24,000, which we are saying basically 80% as a decimal becomes 0.8, and then we multiply by 24,000. So basically, this is how we are going to calculate it. So we go there. Let's enter it as such. So here now we are saying rent. So in the brackets, just summarize the working, we are saying 0.8 times 24,000. And obviously, the answer is going to come in this column whereby we are saying 19,200. Then we can go back to check any other factor overhead that we have in the question after rent. So if you go down, you see that after rent, we have got direct wages, which is not part of prime cost. We leave it. Discount received, we're going to adjust it in the income statement under other income. We leave it. We've got factor supervisor's wages, 9,000. So we also have factor supervisor's wages as a manufacturing overhead, 9,000. So we check if you've got any adjustment in terms of prepayments or accruals in terms of that. Try to see, you see that we don't have any prepayments or uh, accruals in terms of factor supervisors wages. So we're going to put the figure that we have in the list of balances, which is at 9,000. So come here. We are saying factor supervisors, factor supervisors wages. So the figure that we have there is 9,000. So obviously here we are saying 9,000. And we check if you've got any other manufacturer, any other factor overheads that we have in the question. So you can just try to go down, check it. After factor supervisors wages, so we've got royalties, we already adjusted for that. Selling and distribution expenses, we put it in the income statement. Then we've got net cash, that's a current asset, cash and bank current asset and no capital. So which means we've got, we've exhausted everything in terms of our factor overheads. But you can go to transformation, maybe there is a factor overhead that it was not included in the list of balances. So if you go down, you see that we've got depreciation that we have there. But our depreciation can only apply in the manufacturing account if it's depreciation on a non-current asset that is indicated as factor. Like we have got a factor machinery, we are supposed to put that depreciation in the manufacturing. But in this case, we don't have any non-current asset that is indicated as such. It's just written as machinery in the vehicle. So we are going to include it in the income statement. So we can see that we have exhausted everything in terms of factor overheads. So we can come back to add to get the total. Say now 90,200 plus 9,000. So if you add the two, total is supposed to come here. 90,200 plus 9,000, you're going to get 20,200. So you were saying 20,200. And then this one was supposed to add it to 132,600, get our total here, which is now going to be 160,800. And then we are supposed to adjust now for our work in progress. So we are saying for work in progress, we have got opening. We're supposed to get opening. Opening work progress. We'll go back to the question to see what we have in terms of opening work in progress. We can always find the balances for opening. We find it in the trial balance. So we come here, try to see what we have in terms of opening inventory or work in progress. 11,500. So we come back here. We indicate it as 11,500. So we are saying 11,500. And remember, we are saying add here. So we are adding to 160,800. And then the total is supposed to come here. So we add there, we're supposed to get 172,300. So we are saying 172,300. Then obviously now, lastly, you are supposed to subtract your closing work in progress. So we are saying less closing work in progress. So the closing balances of our inventory is supposed to be in the additional information. So you can go down to see what we have in terms of our closing balance of work in progress. So here we are seeing it as 12,400 here. 12,400. So we can just pick that. So we are saying 12,400. Subtract 172,300 minus 12,400. We are supposed to get 159,500. So here we are saying 159,900. So this becomes our final figure in the manufacturing account. And this figure, call it production cost of goods manufactured. We are saying production costs goods manufactured. So this is what we have in terms of our manufacturing account. So this figure, obviously, we're going to carry it on to the income statement and going to place the figure for purchases. We're going to see as we go. So we go down. Now we are going to prepare the income statement. In the income statement, obviously, the figure that we are going to start with is the figure for our sales. So we are saying sales. We'll go back to the question to try to see what figure do we have for sales. And go to the trial balance to check what figure of sales are we given. We've got sales of finished goods. Remember, anything to do with finished goods is supposed to be in the income statement. We've got 260,000 for sales for finished goods. You can just go and enter as such. It's 260,000. But obviously, you have to go through the additional information if you've got anything that is affecting your sales. But in this question, we do not have, so we're just going to put 260,000. So beneath that, we're just going to indicate our less cost of sales. So calculation of cost of sales, remember we say opening stock of opening stock of finished goods, and then we're supposed to add your purchases, which we are going to replace with our cost of production. So we're going to say opening stock of finished goods, we add our cost of production, and then after adding our cost of production, we are supposed to subtract your closing stock of finished goods and get your cost of sales. So basically, that's how we are going to calculate it. Basically, here we are saying we're going to say opening stock, and it has to be opening stock of all finished goods. So we come here, we check what do we have in terms of our opening of finished goods. We're given it here 48,700. So we come here, say 48,700. And remember here, in a trading business, we're supposed to say 8 purchases, but we're not going to do that because it's a manufacturing business. We're going to replace the purchases part with what? With cost of production. So basically, we are saying this is production cost. So we are adding production cost. And remember, the figure that we got in the manufacturing is the figure that we are taking here, which is 159,900. So carry that one, 159,900. It's going to come here. So and this is what we have. And then obviously we add the two. 14,700 plus 159,900, we're going to get 208,600. So after that, you're supposed to subtract less your closing stock. It has to be closing stock of your finished goods. So remember, we are in the trading account, so we are supposed to check the figures for finished goods. So we go down, check what we have in closing stock of finished goods. We have got our finished goods 50,300. So you can just go and indicate that one, 50,300. So here we are saying 50,300. And then we are subtracting, we are saying less, so we can just subtract. Then when we do that, 208,700 minus 50,300, you're supposed to get 158,300. And this figure is the figure for cost of sales. And here, cost of sales, we are saying less. So here we're subtracting. It's just shown in brackets. And then for the calculation now, we are now going to say 260,000 for sales. And we subtract the cost of sales, which is 158,300. And the other is supposed to come here. And it's going to, we are going to indicate it as our, we are going to indicate it as our gross profit. So we are saying gross profit, and we subtract the figure that we are supposed to get is 101,700. So then after that, we check if you've got other income that we have in the question. Other income that we can have in the question. Remember, we've got a discount receipt that we highlighted at that time, which is our discount receipt 6,000. So we're supposed to put it under other income. Saying add other income. We are saying in our question we've got discount receipt. But this discount receipt, the figure that we have there, remember, we are having 6,000, and we are saying that this is the only income that we have in the question. So we are saying it's going to come in here. You can put it here 6,000, and we just indicate it again as 6,000 here, since it's the only one that we have. Put a straight line, whereby we're now saying we are saying 8, so we are adding, 6,000 plus 101,700 to get the total that we're going to put there. You add there, you're going to get 107. 700. So 107,700. And then now we go to the less expensive section. We are saying less expenses. So you can list all the expenses that we have in the question. You can go to trial balance, check what we have in terms of expenses. So obviously we have our rent, whereby we are saying it's 24,000, but we are given a method of apportioning them there, whereby we're saying rent for office is the one that you're supposed to put in the income statement, which is 20%. So you're going to say 20% of 24,000. So we can just go there, say rent, and then 20% is a decimal is 0.2. Then multiply by 24,000. Do that, you're going to supposed to get your 4,800. Then I will check again for any other expense that we have that we are supposed to put in the income statement. So remember, we also have selling and distribution expense 28,000. But before you enter that, you are supposed to come to a transformation to check if you've got any accruals or prepayments of selling and distribution. But see that we don't have anything, so we just take 28,000 as it is and put it there. Selling and distribution. 28,000. So this is what we have. Then we check again any other expense. In the list of balance, you see that we no longer have anything to do of the expenses that we are supposed to put in the income statement under less expenses. We can go to additional information. We have depreciation now, whereby we have got machinery, which is a 10% per annum on cost. Very important. So here on cost means we are using the straight line method. The straight line method, and when they are using the straight line method, we are going to say percentage times cost. And percentage that we have 10%, then we check the cost for machinery. Machinery costs we are given each year is 200,000. So we are going to say percentage that we are given it's 10% of 200,000. So basically 10% times 200,000 to get the depreciation for machinery. So here depreciation. We can say we have machinery. So depreciation we can just underline to show that we are going to calculate two depreciations there. Machinery we are going to say 10%, which is 0.10 as a decimal. It's 200,000. If you multiply that, you're going to get your 20,000. This is depreciation for machinery. Also, we have another that we are supposed to calculate for depreciation. We come here. We see that we are also given depreciation for vehicles, which is 50 per annum using the reducing balance method. 15% for delivered vehicles. So if you come here, you get 50%, so it's saying 50%. So for delivered vehicles, remember it's reducing balance, whereby you say formula that we have for reducing balance is percentage. It's net book value. Where net book value, find it by saying cost minus accumulated depreciation. So first of all, we have to find our net book value, whereby we are going to say cost minus accumulated depreciation of our delivered vehicles. So our cost for delivered vehicle or delivered vans is 120,000. Then accumulated depreciation for delivered vans is 40,000. So we are going to find out the value first by saying 120,000 minus your 40,000. We calculate it as such, and you think that we are going to get your 8,000. So this is our net book value. So to get now the depreciation, we are now saying percentage of net value up to our percentage 50%. So 50% is a decimal to come 0.15. So you're going to say 0.15 times the net book value is 80,000. Calculate it as such, so that we're going to get your 12,000. So let's just try to see. This is what we have for our division for delivery. So we're just going to summarize this working answer section. So you come here, we're going to say delivery van. Remember, we are going to say 0.15 times your 80,000 is our final calculation to get to the answer. and then the answer that we got there is 12,000. So this marks the end of our expenses, other less expenses. Then we can add to get the total. So we add there from 4,800 plus 20,000 plus 20,000 plus 12,000. Then the answer that we're supposed to get is 64,800. So here we are saying 64,800, getting the total for expenses. And we are saying less, so we are subtracting. So basically, we subtract there, we say 107,700 minus 64,800. Answer that we are supposed to get there is 42,900. So this figure will indicate our net profit. So this is what we have, guys, according to this video. Let's stay tuned for more videos. As for this video, I'm signing out.